All right, let's talk about the one number that can absolutely send the entire market into a frenzy. I'm talking about a number that hits your wallet, your savings, your entire future. We're going to break it all down.
And trust me, you need to understand this. So why does this one report matter so much? Because this single number, seriously, can cause huge swings in your stocks, the interest rate you'll get on your next mortgage, and even the value of your 401k. It all comes down to this.
So what is this crazy market-moving number anyway? Let's pull back the curtain and look at what is basically inflation's official scorecard.
So what is it? It's the Consumer Price Index, or CPI for short.
And really, all it is the government's main way of keeping score on inflation. It just tracks how much the prices of everyday things are changing over time. Simple as that. But here's where it gets a little tricky. There are actually two different CPI numbers that get released every month. So the big question is, which one really matters?
So you've got two versions. First is headline CPI. Think of that as the everything number. Food, gas, rent, you name it, it's in there. But then there's core CPI, and this one is key. It actually pulls out food and energy. Why? Well, because gas and grocery prices jump around like crazy, right? Economists want to see what the real underlying trend of inflation is doing without all that noise.
And this is absolutely crucial. The folks at the Federal Reserve, the ones who set interest rates, and all the big players on Wall Street, they focus almost entirely on core CPI. They see it as the true signal. Okay, so how do they even calculate this thing? Well, it all starts with a concept called the market basket.
The easiest way to think about it is like a giant national shopping list. Seriously. The government literally surveys tens of thousands of households to figure out what people are actually spending their money on. We're talking everything from your rent and your gas to movie tickets and haircuts.
And when I say giant, I mean it. This isn't just a handful of items. The official CPI market basket tracks the prices of about 80,000 different goods and services every single month.
But here's a super important point. Not everything on the shopping list is treated the same. They're weighted. And the single biggest piece of the pie? Housing. The report calls it shelter, and it makes up about a third of the whole thing. That's huge.
And this quote just nails it perfectly. Think about it. A 5% jump in your rent is going to move the needle on your budget way more than a 5% jump in the price of bananas, right? The CPI works the same way. Okay, so we've got the basket, we know how it's weighted. Now let's see how all this stuff comes together to create that one final number that moves the markets. The whole process is actually pretty straightforward. You can break it down into three simple steps. First, they go out and collect all the prices. Second, they run the numbers through a special formula. And third, they report the change to the rest of us. And that first step, it's a massive operation. Every single month, the Bureau of Labor Statistics goes out and collects something like 94,000 price quotes. They're getting these from tens of thousands of stores, thousands of apartments, all across the country. This is not a guess, folks. This is a huge data collection effort. Okay, then they take all that data and plug it into this formula. Now I know, it looks a little mathy, but don't worry. All it's really doing is comparing the cost of that whole shopping basket this month to what it cost in the past. That's it. It just gives us a standard way to see the trend over time. And finally, you'll see the change reported in two main ways. There's the month-over-month change, which is just how things changed from, say, February to March. But the big one, the one you always see in the headlines, is year over year. That's the one everyone's watching. Now we get to the most important part of all. The so what? Why does this one number have so much control over your wallet? Let's connect the dots. Here is the bottom line. The Federal Reserve uses the core CPI report as one of its main guides for making interest rate decisions. So the Fed's actions, they're a direct response to this data. This table right here just lays it all out plain and simple. If the CPI report comes in hot, that just means inflation is higher than everyone expected. The Fed is probably going to keep interest rates high. And what does that mean for you? Well, higher mortgage rates, higher car loan rates, higher credit card interest. It can put pressure on stocks too. But if the report comes in cool, the Fed might actually think about cutting rates. And that means borrowing gets cheaper, which is usually great news for stocks and bonds. So now, you're not just going to see a headline and wonder what it means. You'll get it. You'll know the difference between headline and core. You'll know why housing is such a big deal, and you'll know exactly what it means for the Fed and for your money. You are totally prepared. So, honest question. Did this finally make CPI click for you? If this breakdown helped and you're feeling a little more confident, do me a quick favor.
Go ahead and smash that like button, drop the word CPI in the comments below, and of course, make sure you're subscribed with all notifications turned on because you are not going to want to miss what's coming next.
We're going to break down the numbers together and we'll watch how the market reacts in real time. It's going to be a big one. Don't miss it. I'll see you there.